Hello, everyone. Welcome to the show. It's been about a month since my last update, and since I started the portfolio in August last year, 2023, it has performed very well at about 38% in returns so far. So I've recently switched to using Guru Focus in order to track my portfolios. So I'll use it to provide sort of a breakdown of my gains. As you can see, my portfolio is really concentrated. I only have five stocks at the moment. A lot of my gains came from the recent outperformance of a few stocks ever since they reported very good Q4 earnings. As you can see from Meta, it's my biggest performer. If you remember a couple of weeks ago when the earnings release was out, following that, Meta gained the greatest increase in market capitalization in the history of the stock market. So I think in that day, if I recall correctly, my position in Meta gained me somewhere around 20% in a single day. So if I take a look at the performance chart, so this is the first time I'm actually doing this like this. So we have here, the blue line is my portfolio. And then the other lines are the SPY, the Dow Jones Index, and the QQQ. One of the goals I have for this portfolio is to beat at least the S&P and the QQQ. So the backstory of this is that before I actually started this portfolio before August, I used to invest exclusively in the QQQ. I did make some gains, but I don't report or include it in the gains for this channel and for this portfolio. I only actually really started in August last year to do stock picking. So as you can see, a lot of my portfolio gains was very closely tracking the indices. And it's only towards the beginning of this year where the outperformance started to happen. But yeah, so far the portfolio has been performing well and above the indexes. It's still too early to conclude. I think give it a couple of years to see if the way that I pick stocks and the price that I get the stocks at makes sense. Let me quickly run through what is the philosophy of this fund. So there are a few things that I actually look out for before I invest in a company. I think for those of you who have seen some of the past stocks that are the videos that I've created, I mentioned each one in detail. But in summary, I look for high quality companies within my circle of competence. My portfolio is very concentrated. As you can see, I only have 5 stocks. And the reason for that is because I do have a day job. So if I want to monitor my stocks in detail, I think it's not feasible to do so with a very large basket of stocks. Also, it's very concentrated within the technology industry for a select few group of companies because that is my circle of competence. That is actually related to my day job where I work in tech as a professional. I also look for companies that generate or have the ability to generate strong free cash flow. One other thing that I look for is optionality. For example, if we look at a company like Amazon, apart from e-commerce and AWS, it has other potential options of generating revenue like advertising that is sort of related to their current dominant business. So that creates sort of like a flywheel effect. Another way I like to put it is Peter Lynch. He used to always say, what's the story with the stock? So the way that I like to see that, which is his point of view, is for me it's what's next? What's the next story for this company? So for example, we look at a stock like Meta. What's next could be possible revenue expansion, because they are starting to look into WhatsApp monetization. So that's one of the what's next stories for me for Meta. For Netflix, for example, the what's next story is a possibility of EPS expansion through cost reduction, because there's a lot of generative AI developments now in filmmaking. For example, recently we saw the release of Sora, where you can sort of create a lot of B-roll footage that is pretty easy to insert inside the cutscenes in a Netflix original film, for example. So a cost reduction should, in theory, result in EPS expansion. But of course, this is going to take some time, but I believe that it's a possibility based on what I've been observing in the generative AI scene. Of course, I look for companies with a moat. I shan't go too deep in that. I think most people who do investments or follow investors, they understand what a moat is. I look for companies that are trustworthy and have incentivized management, most importantly. So if you look at every single one of the videos that I've created so far, I always drill into how much net worth is at stake for each of the CEOs or, for example, maybe even the chairman that has a controlling stake, like how much of their own net worth is at stake if the company goes bust. And last but not least, the final fund philosophy, which is really important, is to buy stocks that are undervalued versus their true intrinsic value. And the way that I value it is through a few techniques, such as the discounted free cash flow projections. So what's next for the portfolio? Currently, the market is at an all-time high and in extreme greed mode. Nvidia, for example, has hit 5 consecutive weeks of gains and even surpassed Amazon in its market cap. Companies like Meta, Netflix, TTD, Amazon, and a lot of other tech companies have reported incredible Q4 2023 earnings, signaling the start of pretty much an earnings recovery across the US. So there's times like this where I stick to what Buffett always says, which is to be fearful when the market gets greedy. Another person's teachings that I follow very religiously is Charlie Munger. And Charlie always used to say that the big money is not in the buying and the selling, but in the waiting. The way that I like to look at this quote is I think there are 2 kinds of waiting that he's referring to here. One kind of waiting is for an opportunity to buy companies at a bargain, which doesn't come very often. And the second kind of waiting is for the stock to just perform, just to wait and let it perform and do nothing to it over a long-term period. Even in the face of a bad macro environment, for example, like the Fed hiking rates in the last few years, or bad company news, as long as the company fundamentals are unchanged. So it's also why I named this channel Bought While Waiting, because it's sort of to remind myself that yes, it's going to get boring, as is the case in the last few weeks or months, where every time I look at my watch list of potential stocks, there's absolutely nothing of bargain to buy, and I'm left with nothing to do. I can't buy because everything's overbought, everything's in greed, and there's also nothing for me to sell because my opinion of the businesses that I own hasn't changed. So for example, I have not added any new positions since October last year. So that's been nearly 4 months of boredom and waiting and doing absolutely nothing and just letting it ride. I think for the people who are watching this channel, if you are long-term investors, you probably have held your stocks for a longer period of time. Huge respect to you. And that is something that I aim to do on this channel. One of the ways I like to view this waiting game is to wait for what I call pockets of pessimism. So because I focus on high quality companies, most of the time they do not come cheap and are either at fair value or overbought levels. It is only when pessimism hits, where there is a probability that they fall below their intrinsic value, where good companies can be bought at a bargain price. And I think pessimism comes in a few forms, such as global or geopolitical pessimism, for example, like COVID, as we saw in 2020, the risk of a war, macroeconomic crisis, for example, the Fed rate hikes over the last few years, the subprime mortgage back in 2008. I think pessimism also affects, of course, individual companies. For example, when the company's business model is threatened, or example, a company reports poor earnings guidance for maybe 1 quarter. So if you recall for Netflix, somewhere around 2022, if you look at the chart in the bottom right, I think that was around the time where Netflix reported their first ever drop in the number of subscriptions. So there was a lot of competition that was coming into the market at that point. We had Disney Plus, Apple also had their offering, you had Amazon Prime, and then a lot of these other smaller services. And people were starting to doubt Netflix's ability to maintain the dominant market share. And within, I think, was it a couple of weeks or even the days, the share actually fell 35%. That's why you see a very sharp parabolic drop here. But yeah, I think pessimism comes in all these different forms. One mathematical way of looking at why it's great to buy stocks when everyone is pessimistic and the stock is down by a lot is to actually study the mathematics of losses. So let me give you an example. So let's imagine you bought a stock at $100 and let's say the stock goes down $30. If you calculate the percentage loss, that is of course 30%, right? Because you take $30 divided $100, you get 30%. If that same stock gains back the same $30, in other words, it rebounds, the percentage gain that you get actually isn't 30%. It's actually higher than 30% because now your base is smaller. You're not starting with $100. You're starting with a reduced base of $70. So to get back to the $100 that we started with on that stock, we take $30, which is the gain you want to get back to the original, divided by $70, and that's a 42.8% gain versus a 30% loss. So if we look at the chart on the right, as the percentage loss, the numbers in red, gets bigger and bigger and bigger, if you look at the corresponding green numbers on the right, they actually get increasingly larger and larger at a rate that is accelerating much faster than the red numbers. So let me give you an example. If you remember Meta, before Zuckerberg, before his year of efficiency, right? Remember there was a point in time where he was investing into the metaverse. There was a period of time where after COVID, there was a correction. People were starting to doubt the metaverse, all these investments and capex that Zuckerberg was throwing into the metaverse and all this, the Quest, Oculus and stuff like that. At that point, Meta dropped from $370 to $90. That is about a 75% drop right here on this chart on the right. If you think about it, if an investor were to buy a stock at a 75% loss and held it all the way for Meta to regain its stock back to 370 after dropping 90, the gain is actually more than threefold. It's at 300%. Of course, no one can predict the future, so it's almost impossible to catch the absolute bottom of $90 in the case of Meta. But the point I'm trying to make is, as long as you strike when the stock has a level of pessimism on it, and having studied this mathematics of losses, the probability of outperformance is far higher when the prices are depressed very low. And usually, of course, in those cases, they will be below its intrinsic value. Just because of the mathematical difference between how losses and gains work. One question you have to ask yourself is, if a stock really drops, 70%, 30% or whatever it is, do you have the courage to buy at a 30% dip or a 50% dip? One important edge, which is why I keep advocating for an investor to have, is only focus on stocks within your circle of competence. Because I believe that in times like this where it's the toughest, you can make the best judgment as to whether a stock can turn around because you have a full understanding of that business so well within your circle of competence that even if it falls, you are very confident that just given time, it will rebound back. And from a 75% loss, you know that you can get, an extraordinary outperformance of 300% or more. So this is also why the portfolio I'm running is very small, because I'm able to study a very small group of companies in depth to give me the confidence to make a judgment call when the time of pessimism comes. So speaking of pessimism, one form of potential pessimism pocket I'm looking out for is NVIDIA's earnings report next week, or actually this week in a couple of days. I believe NVIDIA is one of the main reasons leading the overall bullish market at the moment, because sales of the GPU chips are a leading indicator of the amount of AI demand there is in the market, which pretty much spreads to the rest of the technology stocks like Microsoft, etc. And if NVIDIA performs below expectations, I believe the market will have a correction. However, the converse may also be possible, because we know NVIDIA has recently been engaging in sovereign level sales. Countries are buying the chips now. So it could be likely that it could be yet another excellent Q4 performance, another quarter's outperformance. I don't know. I cannot predict the future, so we will have to wait and see. If this opportunity doesn't pan out, this pessimism opportunity doesn't pan out the way that I think it does, we'll just have to wait for more pessimistic, broader news across the market, or specific pessimistic news on my individual watch list of stocks. So this concludes this episode, everyone. Thank you for watching, and I'll see you in the next episode.